Testing 1 2, testing 1 2. Testing 1 2, testing 1 2. 1 2 in the arena, 1 2 in the arena, 1 2 in the arena. Good morning, traders. Good morning. Good morning. Happy Saturday. Going live on TikTok now for Q&A/education. Hope everybody's having a good Saturday morning, man. Welcome into the PJ Trades live stream presented by Tostitos, the chip company. Presented by Tostitos, the chip company. Good morning, guys. Good morning. Welcome in, man. Olan, what's up, buddy? How are you? How are you? How are you? How are you? Good morning, guys. How you doing? I am ETCH. What's up, ETCH? Good morning, brother. Good morning, Bradley. What's up, man? How are you? Happy Saturday morning, guys. Is this like a little bit too bright? Come on. A little dimmer. A little dimmer. Hi, man. What's up? How are you? Moses, how are you? I learned so much from you in such a short period. It's actually crazy. Olan, thank you so much, man. Sizzle and Spice, thank you so much for the compliment, man. I appreciate that. I appreciate it. This edition guy opens charts. This is edition guy opens charts on Saturday. I don't know what that means. You always say ETCH, bro. Can you say H? Oh, H. What's up, H? What's up, Addy? How are you, man? Yeah, Finn, we're going to go into some of that in a little bit, man. We're just letting the stream fill up. We just started like 3 minutes ago. Thank you for your time, as always, guys. Happy Saturday, man. You know I love doing this with you guys for free. I actually enjoy it a lot. Please switch off the computer. I don't know what that means, man. Ken, what's up? Do I use opening ranges? This guy thinks we're trading, bro. We have another one, chat. We have another one. This guy actually thinks we're trading on a Saturday. I can't escape it. I can't escape it. This guy thinks we're trading on a Saturday. Oh, man. I love the God post from you. Quan, thank you, man. I mean, God does wonderful things in your life, man, when you trust in him. What are your thoughts on Asia and London? Bro talks about charts on Saturday. Dude, we're educating ourselves on Saturday, man. This is a free educational stream. If you don't want to be here, you can go kick rocks. I mean, dude, every single day is a day to educate yourself in the trading world, man. If you're not doing that, you're probably not profitable, buddy. Trading on a Saturday. Guys, we're not trading. We're not trading, dude. This is backtesting. Oh man, how uneducated are some of you guys in the chat though? How on what level is your education thinking that the markets are open on the Saturday in the stock market? Like, it's actually kind of concerning that you would think that. How do I check London session and Asia session? Bro, I'm in longs right now. Dude, I wouldn't recommend being in any trades over the weekend, guys. Yeah, so this is the indicator I use for overnight highs and lows, guys. I have it literally in my Discord. It's free. ICT kill zone and pivots TFO with these exact settings. This is how oh, and thank you so much for that, man. Thank you for being a member of the Discord. Bro is an embarrassment for the industry. This is why everyone thinks there are so many scammers. What is this guy? Chat, can somebody tell this guy? Like, can somebody tell this guy? I don't know what this guy's thinking. Anyway, here is the we're gonna have to get some mods in here really quick. Hold on. This guy's really annoying my session already. like my boy. I'm just gonna have to ban this guy. All right, Snark, enjoy your time, brother. Have a great life. See you later. Okay, so sorry guys, we had to get the troll out of here, man. This guy thinks we're trading on a Saturday. Oh man, it's hard. It's hard out there, guys. It's hard. It's hard being PJ when you got so many trolls for no reason, man. Anyway, this is the ICT kill zone and pivots TFO indicator. How to get it is you're going to go to Tradingview. You're going to go to Indicators tab, pop this up right here. Okay, and then you're going to look for ICT kill zone and pivots TFO. This is the one right here. Okay, and then the settings are going to copy this. This is going to mark out your Asia, London, New York AM, New York lunch, and New York PM. I have this customized to how I trade it. So you can copy the settings, take a screenshot, do what you got to do. I don't want to waste too much time on the actual indicator itself. So this is it right here. You're moving to live account soon? That's awesome, bro. I've been trying to contact you for the premium. You have gotten Hollywood since you got the paid Discord. Why are you contacting me? I don't know what your question is. I mean, dude, I get hundreds of DMs a day. If I don't see your DM, I can't really do anything about that. I get literally hundreds of DMs. If you have a question about that, just shoot me a message here now or send me an email, honestly. It's probably the best way to contact me. Yeah, we're gonna talk about this trade right here, guys. So, all right, let's get into it because we're wasting too much time. I got about an hour today to go over stuff. So here's the trade idea. Here's the framework. We're going to walk through why I like this up into these external highs here and how we actually executed the trade. Now, full disclosure, I took this trade off at break even on Friday. Okay. But a bunch of members still held the trade. I'm going to explain to you why I took the trade break even. And then I'm going to explain to you why I like the setup, but why I actually didn't actually stay in the setup. There's a lot of factors, and we'll get into that. So if we look at the 1 hour time frame, the 1 hour time frame, in my opinion, is one of my favorite time frames to get a bias from. And here's why. As you guys can see here on the 1 hour time frame, we're actually delivering from internal to external this entire week, right? We're trending higher. Then we're pulling back into an internal fair value gap, right here. And then we're trending higher again. We're pulling back into internal and we're trending higher again. Let me get that out of the way. So we're making higher highs, lower highs, higher highs, lower highs, higher highs. So we're trending upward. We're looking to be bullish and we're looking for trade setups to go higher, right? The market's just steamrolling right now. So on the 1 hour, we identify this 1 hour fair value gap right here. As you guys can see, this is where the trade ends up taking place. So we're inside of this 1 hour bullish FEG. Now, what I was looking for was a sweep of this London low here. Now, if you use the indicator I just told you guys about, you'll know where the London, the Asia lows, all that stuff rests. Here's London low getting swept right here. Okay. And now if we zoom in on the 15-minute time frame, we're looking for a couple, let's go a little bit lower. We're looking for a couple key components out of London low, chat. And I know most of you know the answer to this already. We're looking for V-shaped recoveries. We're looking for strong strength out of the London low, okay? So we end up getting a strong move in reversal. That means that buyers are starting to pick up. And if we look at the 1 minute time frame here, we're getting nice bottom wick action, which means there's good volume coming into the market here, right? At this point, let me delete everything. We're just going to walk you guys through everything. At this point, there's really no trade setup for me just yet, right? There is a 2 minute inverted fair value gap to the upside here, which is of interest, but I'm still not 100% sure that this wants to reverse just yet. So I don't take an entry just yet, okay? I'm waiting for a little bit more structure to form, and I'm going to show you what I waited for. If we hop it onto the 1 minute here, you guys can see this is a classic breaker setup, okay? I'm going to delete this. The inversion is optional, but we did not trade the 2 minute inversion. After market close, it swept the lows. All right, no, brother, it swept it at 10:44 in the morning on Friday morning, man. Let's try to keep up, dude. You're slowing me down. Okay. Sweep liquidity at London low. 2 minute inverse. If if we're looking at a breaker model, chat, what do we know about breaker models, right? We put low, high, lower low, higher high, right? That's going to confirm our breaker right here. The two highest up close candles before the leg down that took liquidity is the breaker block. Now watch this stuff, man. It's very simple. Here's the breaker block. Look what happens. We're now above the breaker. We're retesting. We're holding the breaker. We're never closing below the breaker. And then we finally break out here. That's how simple. That's how simple it is. Breaker is basically a failed order block. Incorrect. A higher time frame order block is a lower time frame breaker. Put that in your notes. A higher time frame order block is a lower time frame breaker. Okay. So here's the breaker block, right? And then here's the trade idea. This is the trade idea right here. Oops. Let me use this. Here's the trade idea. Stops are going to be... See, I had stops below 2-minute inverse here. I had a little wider stop. And then TP1. Okay. TP2 at this swing high and TP3 up into here. Now, do we understand why I'm TPing at all these different areas? Or why am I TPing here, here, and here? Do you guys get that part? This is external liquidity, right? We're external liquidity. We're hunting external orders. There's a lot of orders here. There's a lot of orders here. And there's a lot of orders up here at these relative equal highs. Okay. So we have a lot of liquidity to the upside after sweeping London low, right? So we sweep London low. We get the 1 minute. Now, full disclosure, I actually take this trade off. I actually hit break even on this trade and didn't get back in the trade. And here's the reason. Friday was OPEX day. If you guys don't know what OPEX day is the day that options expire. Okay, so you have either options expiring in the money or out of the money. The market loves to be very choppy and manipulative on an OPEX Friday day. Okay, and I don't have good results trading Friday OPEX. So I get into this trade here. Let me show you what happens. I get into this trade here, and I get chopped up for a good 30 minutes or maybe even more. Maybe it's like 20 minutes. Let's see. 32 minutes of chop. I end up taking this trade off break even because I'm like, you know what? I don't really want to deal with this type of price action on Friday OPEX. Again, my stats on Friday, are not that good. So I didn't like it. PA was slow, right? And I was just protecting capital at this point on a Friday, right? I don't want to give really capital back on a Friday. So I end up taking this trade off. Now, a lot of people in the premium ended up holding the trade, and they end up getting a banger trade idea. So I want to just talk to you guys about why I got out of it, why we held it, why some people held it, but why I personally closed it. And that's part of trading, man. Sometimes there's going to be days where you're just... Also, another thing, my mental capital was kind of worn this week, dude. I took no trades Monday, Tuesday, Wednesday. The market was absolutely terrible. So my mental capital sitting there every single day not getting a trade in was starting to get worn down by the time I got to Friday, right? So there's certain things, man, that you got to understand in trading. It's not about, oh my God, let's trade every day. I got to the point Friday where I'm like, oh man, I'm kind of mentally exhausted. Do I want to hold this trade? And here's the thing. My average trade time, you guys are going to be shocked by this, but my average trade time is 7 minutes. This is how long I'm in trades because I usually trade NQ. This trade took 2 hours and 18 minutes to hit full TP. That is well beyond what I'm willing to hold, especially on a Friday, right? So there was factors for me not holding the trade, but the trade ends up working out, and we can go back and we can review the tape, and we can say, hey, this was it was a 1 minute breaker. We traded the 1 minute breaker. It just took a lot longer than I would have liked to take the trade in. So, here's the entry, here's the framework right here, 1, 2, 3, and the trade ends up delivering very, very nicely, but it just took too long. Took way too long for me. I was not trying to sit around on a Friday this long. Anybody have any questions about that trade setup specifically? We can kind of move on to some other points. I want to talk about like time-based liquidity too. I usually have a time stop on my trades. And what does that mean? It means if the trade is chopping around and not moving towards TP in a certain amount of time, I put a time stop on the trade. Meaning if it takes longer than a few minutes for me to start moving in profit and I'm just chopping, after about 20 minutes, 25 minutes, if I'm not moving towards target, I actually will cut the trade. I like to trade with time-based liquidity. Well, PJ, what is time-based liquidity? Well, it's exactly that. In the macro hour, in the macro time slots, okay, let's talk about macros for a second. You see right here, I want to show you something. This is the 1050. Can you guys see this? This is the 1050 to 1110 macro. We should be moving during this macro. We don't move at all. We chop up and down during macro. I want to see this market from here start moving. I get chopped for 32 minutes during one of my favorite, actually it is my favorite macro. Okay. So the macro, it doesn't deliver there. And unfortunately, I end up just taking a trade break even. So I want to kind of break down why I took that trade break even, why I like to trade with the macro, and why time-based liquidity is so important in my trading. If I don't have a swift move pretty quickly, I'm fine with taking a trade off break even. Where's the stop? In this situation, the stop's always going to be below the breaker. But in this scenario, underneath this 2-minute inverse is the safest stop. Right here. There's a 2-minute inverse right below the breaker. So this is the safest area to put your stop, right below it. So in this example, you're going to be running about a 4.5, 5-point stop on ES, and you're targeting up into this external high at TP1, 2, and 3. Okay. Do I trade live? Yeah, of course, man. I got a premium channel where I trade with hundreds of traders live. Education, all that stuff. Education, classes, course, that's all in my, that's for people that want to take their trading to the next level. If you're just here for free content, sit around and relax, bro. I'm not trying to upsell you on any of that other stuff. That's stuff for people that are serious. Guys, I appreciate all the new follows, man. Thank you so much for the new followers. Welcome into the live TikTok. We do this every Saturday morning. Do we have any questions, guys? Do we have any questions? I want to answer some questions here while we go back and forth. Then we can kind of maybe bring some people on too, like we usually do. I'm learning so much in this Discord. Thank you so much for being a member. Tremendous content. Thank you, brother. How can I prove my consistency? Your consistency is gonna rely solely on you, man. You can have a trading setup, but your mental clarity, your mental mind is inconsistent. And what I mean by that is your setups, it's not the setups that fail, it's the trader, right? It's wanting to trade again, wanting to go from I'm green to trade again to going red and then going deeper in red. Your consistency is going to rely on you, man. The trade models work. Most traders just cannot fathom the fact they cannot lose, man. They don't like to lose. And one of the best books you guys can read, I recommend everyone read this book. It's called The Best Loser Wins. In order to be successful in this business, you have to be the best loser. You have to be able to lose trades, man. Personally, this week, this is the first week in 5 weeks that I'm red. And I'm going to tell you how many trades I took. I took 2 trades, 2 losses, and 1 break even the whole week. This is my first losing week in 5 weeks. This market from Monday to Wednesday was terrible. And then Thursday and Friday, Thursday was probably not that good. Friday was the better trading day. But overall, it was just a tough week, man. And I protected my capital this whole week, right? You're going to have weeks where you don't win, man. It's about how you rebound and how your risk is managed in your trading, right? So to be consistent, you got to show up every day. You got to journal your trades every day without fail. You cannot skip that. And you got to back test your models, dude, like we're doing here. We're showing up and we're back testing our models. You got to do that stuff. Can you explain what a macro is? So a macro is it's at every end of the hour. So at 10:50 to 11:10, 11:50 to 12:10, 9:50 to 10:10. It's when the algorithm and when orders typically come in and flush the market, you get a nice influx of liquidity during that macro. So when I'm trading, I'm looking to kind of identify my trades inside of the macro. Either maybe a little bit before it or a little bit after it, but that's what time-based liquidity is, man. I'm getting into a trade and my trade needs to be moving for in a certain amount of time. I don't like to sit in trades long, bro. The longer you're sitting in a trade that's running break even, the lower the probability of the trade ends up being. So if you could trade inside of the macro and get delivery, it's perfect. That's why I love to trade inside of the 1050 to 1110 macro. It's my favorite one. Do I look for a liquidity sweep? Yeah, this is literally the liquidity sweep right here. So market opens at 9:30, right? We chop, we chop, we chop. We come down, we take London. There's your liquidity sweep. There's your V-shaped recovery. There's your 1 minute breaker setup. There's your 2 minute inversion, right? Now you're starting to get bullish order flow in a reversal. And what we're doing here is we're targeting opposite liquidity. It's really not that complicated. People just want to complicate this stuff, dude. I had a guy tell me the other day that my model is not complicated enough for him. Guys, if the model is more complicated, that means you're going to make more mistakes. We're waiting for a sweep of liquidity at the London low after 9:30, and we're looking for a V-shaped recovery and a model on the lower time frames targeting opposite draws on liquidity. That's it. You got to keep it simple, bro. The more you guys complicate this stuff, I promise you right now, the longer it's going to take you to become profitable. If you're looking for every single shiny object syndrome strategy, trust me when I say this. I've done this for 9 years. I have strategy hopped for years, bro. The first 4.5 years, strategy hopped. EMAs, support and resistance, RSI, overbought, oversold, all that crap. Pick one, I did it. That stuff doesn't work. It might work for some of you. It just didn't work for me. I needed a model that I knew right away. This is what I'm entering. This is what I'm exiting. I needed that clarity. That's where your edge is going to be. So you guys, you're not going to find a strategy every single week. Like some people have the shiny strategy syndrome. It's true. They strategy hop. If it doesn't work one day, they go to a new strategy. And then it doesn't work and they go to a new one. Guys, this strategy works. You're going to go through times and periods where you take losses, but that's every trader in the world does that. Isn't this TJR's strat? I don't know anything about TJR. I'm pretty sure TJR trades ICT concepts. Again, guys, this is not TJR's strat. This is not PJ Trade's strat. This is not Justin Wheelan's strat. This is ICT principles. And then I cater it towards my style of trading, right? So you have to know that first. The foundation is the 2022 mentorship model. The rest is stuff that we've all implemented on our own to make it work for us. So I hope everyone understands that. I didn't invent this. I mastered it in my own way, just like every single other trader out there. How do I mark out London and Asia highs? I'm not going to go through that. I just went through that in the beginning of the video. Go back to I'll post this on YouTube. And you guys can go back and learn how to do that. I put it up on the screen. Say why exactly there? How did you know it would go up even more? Liquidity, bro. Liquidity. How did I know? Liquidity. Buy side here, external here, external. Look at this right here, guys. This is what I want to teach you guys right here. When the market, look at right here. This is all you need to focus on right now, right? Whatever you're doing right now, focus on this. You see how these are relatively equal to each other? You see how they're relatively equal? These are relatively equal to each other. You see how they're relatively equal? They're all like in the same area. You know what this is? What is this right here? What would you call this right here, guys? There's two things you can call it, but what would you call it? Relative equal highs. Relative equal highs. But what does it look like to you? Does this look like it's like a little sketchy? Does it look a little odd? This is engineered relative equal highs. It's the market engineering relative equal highs to come back to it at some point because it's so flat and pointy. That means there's a bunch of orders resting up here. They were fighting for position in this zone. It's engineered relative equal highs. And what do we know about engineered relative equal highs? They are fantastic points for liquidity. So to answer your question, how did I know it's going up to this external high? Those are engineered relative equal highs. Off of a liquidity pool like London low with a V-shaped reversal, now we're targeting opposite draw on liquidity. Guys, it's internal. This is an internal draw to external liquidity. I have a YouTube video on this on YouTube that blew up because it's so simple to understand, and I think that's the reason it resonated with so many people. The internal to external model is one of my favorites to trade. If you're not understanding this, just look at the 1 hour for a second. Look how we're delivering, guys. We're going from here's the move higher. We pull back into this internal 1 hour fair value gap. We sweep liquidity. We close in the gap. We close in the gap. It's so obvious. And then we draw higher. That's it. Internal to external liquidity, guys. Internal to external liquidity. And the trade ends up delivering full TP. How are you finding your bias for the reversal? Higher time frame alignment, guys. Higher time frame alignment. It's not that complicated. What has this market been doing for 3 weeks? Are we selling off? No. We're bullish. We've been bullish. We're bullish on the daily. We're bullish on the 4 hour. We're bullish on the 1 hour. We're bullish on the weekly. My higher time frame alignment is pointing me where? Pointing me to the upside, right? I want to go higher. So my bias coming into every day this week is higher. It's not that complicated. When your market is trending, the trend is your friend. Okay? You want to be trading within the market trend. People overcomplicate this daily bias thing. I think it's the one thing about ICT that I do not agree on. It's once we sweep, what's the overall draw? What's the trend? It's higher. It's bulls are in control of this market right now. So you're looking for higher. Capiche? But why didn't you expect it to take Asia low first? Great question. Here's the answer. London low gets swept. Now, there's another indice. It's called the NASDAQ. The NASDAQ gives us guidance when we're trading ES. If I'm trading NASDAQ, ES gives me guidance, right? What you need to do is you got to flip over to the NASDAQ. What did the NASDAQ do? Oh, wow. The NASDAQ took London. The NASDAQ took Asia. And the NASDAQ tapped into the first presented fair value gap on the leg. So the NASDAQ just cleaned up a ton of liquidity to the downside. That's a good thing. ES didn't take that lower draw. Why? Why didn't ES take the lower draw, chat? Why? It's the stronger indice on the session. This is why we took the trade on ES and not on NQ. ES is the stronger indice on the session. It doesn't need to come take all this because it's the stronger indice. NQ takes all the liquidity. ES was only down a certain amount of points on the day. We're looking to take a long on the stronger indice, which was ES. There was no SMT at the lows. No SMT. And then the entry, guys, there's two combos to the entry model here. There's two combinations. It depends which one you want to do. There's a 2-minute inverse here, right? I didn't take the 2-minute inverse because the 2-minute inverse, in my opinion, it's a little early in the cycle. That would have worked, but I didn't take it. The 1-minute breaker block to me was the confirmation. Because here's your change in the state of delivery over this little high here. You see how it respects it perfectly? Low, high, lower, low, higher, high, respect, 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 go. This was 32 minutes of respect. I wasn't trying to sit around for it. Some people did. I wasn't trying to. I just, mental capital was worn. Boom. I'm always giving sauce for free, bro. This is the sauciest live stream on all TikTok, bro. This is the sauciest. No, nobody does this. Trust. Guys, if you're just tuning in, man, my name is PJ Trades. I do this every Saturday here, free, live on TikTok. We've grown to 100,000 followers here on the platform because we give out a lot of free information. If you're enjoying this stuff, just do me a favor and follow the stream. And if you want to take your trading to the next level, I have a free Discord as well. So much free content in there. Make sure you get yourselves involved in that because I have so much free stuff there too. On my socials everywhere, free content. But yeah, appreciate you guys being here. Happy Saturday morning. Is the breaker block your favorite? Honestly, man, my favorite is the inverted fair value gap model because it could be it's such a what do I call it? It could be used in so many different ways. So I like it for that reason. The breaker, in my opinion, it's a little bit rarer of a pattern, and it probably has a slightly higher probability than the inverted. But they're both so good, bro. They're both so good. And then obviously the unicorn is like probably the highest rated pattern, which you don't see that often. So for me, it's inverted fair value gap, unicorn, breaker. That's how I would rate them. Am I live every day on Discord? No, man. No. I'm not live every day on Discord, bro. I go here free once a week on Saturday mornings. I'm live with my members during the week. Do you think ICT 2022 is what? Yeah, I mean, I recommend that to everybody. The 2022 model is a must. If you haven't went through the 2022 model, then you need to start watching all of my videos because basically everything that's in that is dumbed down in 2 to 3 minute clips here on TikTok, on YouTube, wherever the heck you consume your content. So you'll learn it a lot quicker here than it would take you to watch 50 videos, about 2 hours each. It will take you a long time. Okay, so let's talk about some other trade models here. Let's see here. This week was really not good for many trade models, man. This was such a sideways consolidating market. When you guys see a market like this, you really want to avoid it because what happens is you get SMTs at the lows and SMTs at the highs. It means it's indecisive. It doesn't know where it wants to go. See how we're stuck in this box formation with no breakout? This is called range bound trading. It's really difficult to trade. You're in a 20-point range on ES. You really want to wait for like some sort of breakout to trade, right? Like you see how we're here, we're like sweeping and we're moving swiftly. This is not something you want to be involved in here. That's hard to trade. So what I want to show you guys on the higher time frame, let me just delete everything and go through some stuff here. There's some really, really good stuff to go over here. Some really good stuff. So people ignore the 4-hour time frame, and it's really a shame because what you guys need to start doing is understanding that the higher time frames are always going to give you guidance. If you're just stuck on the 1 minute, the 2 minute, the 5 minute, you're missing the bigger picture. So here's what I want to show you. Right, Friday, May 9th, market gaps up. Right? We gap up right here. So the market ends up gapping up at the open, 75 points, which is insane on ES, right? So we gap up. And then from there, we just continue higher. We're just making new highs. We're going higher and higher and higher. We're up 230 points from that gap up, right? Now, on the way up, what are we doing on the way up, chat? What do you guys see here in this market structure? What are we leaving behind everywhere? I want you guys to answer the question. Fair value gaps. Correct. We're leaving behind higher time frame fair value gaps, right? On the way up. Okay. So here's a 4-hour gap right here. Okay. Here's a 4-hour gap right here. What are we doing, guys? What are we doing on the way up? We're leaving behind 4-hour fair value gaps. And if you guys are not marking these gaps on your chart, you're literally trading blind. Okay. So here's what happens. Market rips higher, pulls back into the 4-hour, goes higher, rips higher, pulls back into the 4-hour, rips higher, Pulls back into the 4 hour. Rips higher. We're going internal to external the entire way up. You guys see that? This is a trending bullish market right now. And all you need to understand is you want to wait for an internal fair value gap to form on the leg. Wait for a pullback into that 4 hour gap, just like this right here, and then find a lower time frame model. That's it. That's it. Now, on this leg here, what do we notice? What are we noticing here? This gap has not got filled yet, right? So, if we're patient, we might have an opportunity for this market to pull back into the 4 hour. And this might happen Monday because of what happened with the Moody's credit rating agency going from AAA to AAI. Since the U.S. government spending, I guess, is, not that good, we might have a Black Monday and we might pull back here. We'll see. Okay? And then possibility for this market to go even higher. I really don't think that credit agency thing is going to be too much of a news event. I think it's going to be forgotten about pretty quickly. I think what's more important is these tariff wars and these deals with China and everywhere else. So I'm definitely interested to see if we come back into this 4 hour gap. And then all it is a lower time frame model for even higher, because if we look at the weekly time frame, here's my draw. I'm giving you guys free sauce right here, by the way, bro. This is my draw. This market needs to come up and fill this unmitigated weekly fair value gap. See it right here on ES? We have to come up and fill this unmitigated gap. When? We don't know. But if we pull back, right? Now, here's another thing we can pull back into. You see how we flipped this weekly gap? This is a weekly gap here. We inverted it now. So this can come back into weekly and go higher. What? Hey, Abel, what's going on, buddy? What's going on? What's going on? What's going on? Do you trade the 9:30 PO3 or the 10 a.m. PO3? I like the 9:50 to 10:10 macro. So I usually like to catch reversals in that slot. Usually you see a reversal around 10:30. So the higher time frames, guys, what are we looking at here? Possibility to pull back into it inverse weekly for higher. And if we go above this, where are we going next? We're taking out all this liquidity right here. We're taking all of this. This is going to be all-time highs. Then we're in price discovery mode, and trading gets very difficult because we're not going to have any data to the left. We're not going to be able to see anything up here. This will all be new highs, which is not fun. Price discovery trading is not fun. Bro's giving mentorship live for free. Basically, bro. Basically. I post all my live all these sessions, guys. I post them on YouTube for free. The only thing I ask from you guys is you follow the channel and you follow my socials. That's it, man. Giving back to the community, man, that gave me so much. That's what I do. No, I don't trade gold, guys. I don't trade gold. I don't trade gold. I trade two indices, NQ and ES. You're looking at both of them. Here's ES, here's NQ. Now, if we look at the weekly gap on NQ, look what we did already. We filled this weekly. We're in this weekly gap here. And we have an overlapping daily gap a little bit higher. I'm going to show you right here. So here's the next draw on NQ. Daily fair value gap here. And then there's actually another one here, which is a BPR gap sitting right here. So we have a daily BPR gap. I'm interested in all these gaps to the upside still. We have a lot of liquidity higher still on NQ. And ES has a lot of room up to this weekly gap up here. So we have a lot of room to the upside still. Definitely interested to see what happens. So higher time frames, guys. That's all you need. Is like we're looking at the higher time frame bias and we're bullish. That's it. Do you set multiple TPs? Of course, bro. This is my multiple TPs right here, bro. Right? Scale out position here. Scale out here. Full TP here. So you're scaling out positions here. Stops are always going break even for me personally at either 20 points or 10 points on ES, right? And then stops are break even right here. So this trade becomes risk free. Lower than higher for the week. I mean, I would like to see the 4-hour gap get filled. That's what I'm looking at here. I would like to see this 4-hour gap over here get filled. This would line up really nicely with my idea that we flip the weekly gap down here, right? We flip this weekly gap. We come back down into the 4-hour, which is right there. You can see it. We fill, and then we go higher. That would be ideal. We might have a little bit of a pullback on Monday or Tuesday, and maybe we can continue to go higher. I don't know yet. I don't like to predict the markets like that, honestly. I wait for price action to show me its hand, and then we make a decision. I'm a reactionary trader. I don't like to be a predictive trader. It's very dangerous. Don't try to do that. This is what I learned in premium with PJ. Protect the capital. Always, man. We're always protecting capital. Thank you so much for being a premium member, brother. I'll see you on Tuesday. When you take partials, I just told you, bro. Partial, full. Partial, full. Scale, full. Right here. External high, external high, external high. Can I analyze your 5-minute bearish inversion trade from yesterday? Sure, bro. Let's do it. On ES or NQ, bump? Do you want to hop on the call real quick and show me it, or how do you want to do it? MNQ? All right, let's take a look at it. 5-minute inversion. At what time was it EST? What time was it EST, brother? 11:30 EST. A 5-minute inverse. All right, let me take a look at it. $11:30 5-minute inverse. This is 10:30. You're sure about you talk about the 10:30 inverse right here? 11:45 inverse. Okay, hold on. 11:45 inverse. I don't know where you're looking here. I see this right here. Yeah, you're talking about this right here. So listen, I'll be honest with you. NQ was super laggy on Friday. That's why ES was a better trade. So just keep that in mind next time when you're trading. When you see ES holding better than NQ, which it was a stronger indice, make sure you flip to the better indice to trade for long. Like ES was way better. You see how it was displacing? Look at NQ was lagging at this time. But anyway, yeah, you get a 5-minute inverse right here. So you have London low getting swept, Asia low getting swept. First presented 15-minute fair value gap, which I liked. I liked everything I saw here on Friday coming out of that low. Last line of defense, guys. If you don't know about the last line of defense, you need to get in that premium Discord. This is one of the most fire strategies right here. We flip out of here, okay? And then our homeboy in the chat, forget his name, takes a 5-minute inverse. Where'd you enter, though, brother? Where's your entry? Was it here? Is this where you entered on that flip? That's why I took the trade. I just took profit at last swing high, CE entry. Where'd you take the entry? Was it on this flip here? I'm assuming you took it on the flip. This is the first candle close above that gap. CE of the inversion. What do you mean CE of the inversion? You took it here? No. No. So you took it, you flipped and you waited for the retest, I'm assuming. Right here. You took it right here. Yeah, you took it right here. So you took it here. Stops were, I'm assuming, somewhere in this range here. Maybe lower, maybe right above. Stops like this. Probably a little bit too wide, right? 423. Yeah, it's too wide. Where'd you run your stops on this one? Let me see if the 1 minute gave me a better stop idea. Maybe down into here. Kind of tight, though. That's not terrible. Something like this. Oh, at the swing low? This swing low or this swing low? Or this swing low? You didn't have it down here. Listen, you could have ran it like this below the inversion. TP1 at this swing high here. Sorry, TP1 here. 2, 3 at New York PMI. I'm assuming this is probably what it looked like for you, but it was super choppy. Look how choppy this was. This is why I avoided trading. But there's your breakout finally. Something like this, right, brother? This is what you took? Yeah, down there. I took 2 cons off at swing high and the rest at 480. Nice trade, bro. Nice trade. 5-minute inverse. I just hate the price action on NQ on Friday. That's the only thing that would have downgraded the trade idea for me. ES was cleaner. But yeah, it just took so long. That's the only downside of that trade. 3 hours and 44 minutes, dude. 3 hours and 44 minutes for this to go 72 points is insane. It was just weird price action on Friday with OPEX. Very long trade. Very, very long trade. It didn't even get to New York PM high. Did it ever get to New York PM high? I don't think it did, right? Oh, maybe it did. Let me see. Holy crap, this thing's slow. Yeah, it never even got there. Never got to New York PMI. It took out this wick right here, so that would have been like the last final target. You would have been out. 72 points for 3 hours is good. It's not at all. Trust me, NQ does not, it's usually not that slow, bro. Just to give you an example of look at this move right here. This is 94 points in 9 minutes. 72 points in 3 hours is the slowest I've ever seen NQ move, to be honest with you. It's really slow. Like NQ moves like a mofo. 103 points in 24 minutes, just to give you an idea. NQ is a lot faster. So my average trade time on NQ, I take 95% of my trades are on NQ. It's about 7-8 minutes, dude. That's how fast it is. ES is a lot slower. But for the market to take that long on NQ, it's just no bueno. No bueno. Thank you for looking at that, PJ. No problem, bro. Anybody else have trades they want me to look at? I'll go over them now, bro. This is your time to get free feedback on your trade setups. How do I send them? You don't have to send them to me. You can just tell me what it is. Tell me what time it was taken and where it was. Brother, can you suggest some tips to fix psychology and impulsive decisions, man? Dude, you got to set rules for yourself, bro. You got to set rules. I have them written right here on my wall on a piece of paper. My rules right here say 3 max trades in a day. 1 win, I'm done. 1 win, 1 loss, I'm done. 0-2, I'm done. You gotta stick to your rules, bro. And you can't get into the market expecting to make money. Never do that. You enter the market completely neutral, emotional. Your emotions have to be separated from the business. You're literally just looking at this market from a risk to reward perspective. What's my risk? What's my reward? If you bring emotions into your trading, I promise you it'll be the fastest way that you end up blowing accounts and losing money. You can't get emotional in your trading, dude. You can't. Ask the guys that are in my premium. They watch me trade, take no trades for 3 days straight. You got to be disciplined in your approach. 5/13/25 around 10 o'clock. 5/13/25. Let's go check this out. On ES or MNQ? Sorry. ES or MNQ? What did he say it was? I lost his message. 5/13/25. 5/13/25. Let me remember. 5/13/25. What time was it, brother? Around 10. I'll tell you one thing. I remember this day specifically. There was no way I was getting involved in this market whether it was overextended. What was your trade setup? You just got in on like a continuation trade? Because there's nothing here that would fit my model. Yeah, this is 10 a.m. right here. What'd you end up taking here? 10:30. Wait, hold on here. Around 10 o'clock. All right, what's your trade setup though? This to me is, I remember this day specifically. I sat on my hands. There was nothing to trade. I'm assuming you just took a straight up continuation play and got kind of lucky with it, is what I'm assuming. I think my comments are frozen. I can't see anybody commenting. Oh, here we go. Oh, I'm trying to figure. Kivo. So basically, brother, I think you just took a continuation long. Nothing that I teach or anything would have been valid here because it's so overextended to the upside. You're in a super premium of the move, but yeah, just not something I would be getting involved in. You took a continuation long. I mean, you could have got really wrecked here if this market just wanted to flip. Super high risk trade position that ended up working for you, right? Is that what you did? I don't trade gold. I'll not be looking at it. Can you review the 928 sweep and 5-minute inversion on NQ for short yesterday? The 928 sweep and 5-minute inversion. Okay, hold on. I think we already talked about this though, right? Hold on. Can you... can you review the 928 sweep and 5-minute inversion on NQ for short yesterday? The 9... Okay, here we go. You're looking... The 928 sweep and 5-minute inversion. Okay, hold on. Let me bring this back. 5-minute inverse to the downside. 5-minute inverse to the downside. Okay. I'm assuming, well, this is the only inverse that you probably would be looking at, right? Is this what I'm talking? Is this where you traded right here? So you have a sweep. You have a sweep of basically nothing. You have a London high sweep here, and then a resweep. So let me take that back. You do have a London high sweep here. Is this the 5-minute inverse that you took right here? So let me mark this out. So you have a London sweep here. Okay, so here's London high. Here's your sweep. You get a resweep of London high, and then one more manipulation, which I actually don't mind, which looks pretty decent. And then my issue with this trade is probably going to be, what was your draw? Never mind. Your draw was London low. Your draw was London low, right? Yeah. So here's the reason why I didn't take this trade. I remember looking at this. I didn't take this trade because I'm not bearish. I didn't want to be counter trend trading. We saw this on the live, and I was very tempted to take it. But with the way the market has been moving this week, I just did not want to take a counter trend trade short. So I'm assuming you took this inverse here. Right here, right? And then on that retest, yeah, actually I remember watching this. I'm like, I'm very tempted to slam this short. It's not a bad trade setup. I'd rather have waited for the low to get swept to go long, and that's how we played it. It's great. It's really amazing that you can make money both ways, right? You can make money short, you make money long. You're not wrong for taking this here. It's just, it's higher risk, right? You're reversal trading, right? You're trading a counter trend trade market. When the market higher time frame is bullish, you're counter trend trading short. So it's just a higher risk trade. I'm not gonna say it's the wrong trade. I actually think it's a good trade for you. You have draws lower, you have London, and you have Asia lower, so it made a lot of sense. It's just it didn't. I'm looking for longs on that day. It's that there's no right, no wrong answer here. Perfect. Really nice trade, honestly, bro. Good trade setup. Good trade setup. You end up getting how many points out of that trade? If you're targeting Asia low, you got out of that trade. If you entered here, you got 97 points, bro. That's a good trade. Another issue. Oh, never mind. That was 9:30, right? Yeah, no, it's 10:30. That actually was a solid trade. You just got to be aware that you are counter trend trading because look what happens. The real move ended up going higher after we swept. Same thing on ES, right? Same concept on ES. 97 points copy trading 5 accounts. Yeah, it's big money, bro. I on Thursday last week, I was copy trading 5 accounts. I made $2,000 per account on this ES trade that we took. This absolute banger ES trade. Where was it? Let's go to ES. I'll show you guys the trade I took on Thursday. It was a banger setup. Where the heck was it? It was Thursday last week, though, right? When did I take that trade? Guys, if you guys are not in the Discord, I don't know what you're doing, man. I actually do my trade reviews for free in there, so everyone gets to see what I'm trading. It's the best way to learn, in my opinion. Let me go back. We took... What did we take, bro? Where is that trade set up from? Wednesday, 6 to 10. Thursday. Here it is right here. We took a very, very clean trade setup. I'm going to show you guys exactly what we did. Okay, so here is the trade setup from Thursday last week, the week prior, not this past week, the week before that. So the week of May 6th to May 10th. This trade was executed on May 8th, right? Yeah, May 8th. I'm going to show you guys what we were looking at here. On the 5-minute first. So here's what I'm looking at on this trade idea, right? The market's obviously trending bullish. We're going internal to external. We're higher time frame bullish. We have a massive 5-minute gap here. That is the first presented 5-minute gap on this upward leg. Okay. So I'm looking for this gap to hold us for higher. And what I'm looking for is a manipulation first. So here's the low, and then the market manipulates lower. That becomes my money sweep. If you guys are familiar with that on this channel, I talk about the money sweep all the time. Here's the manipulation on the money sweep. Okay. There's your manipulative leg. Now, as I get the manipulation leg, you guys probably see this trade review on like YouTube or TikTok, but we end up getting this really nice bearish gap to the downside. This is a 1-minute bearish FEG. Okay. I'm now just waiting for this market to flip from the inverted fair value gap to the upside. Now, if you're looking here, you're wondering, well, Paul, where's your targets? Easy. Target 1, target 2, target 3. Look at all these relative equals right here, guys. Look at all these relative equals. What did I tell you about engineered highs? Target 4, target 5, final TP at target 6 here. We had 6 targets on this trade. And this is what I'm trying to tell you guys. That week, we took a total of 1, 2, 3, 4. We took 4 trades that week. This trade right here, you could literally the entire month take off. This was the trade setup right here. Entry, 1, 2, 3, 4, 5, 6 TPs slapped. You don't even have to trade the rest of the month if you want to. If you want to take high probability trades, this trade right here should feed you. Okay. So this trade happened at 11:10, right at the end of the macro. I love the trade. What did I tell you about macros, chat? What time is this macro at? Here we go. 10:50, 11:10 macro. Right at the tail end of that macro, we get entry and we rip to the upside and we slam 6 TPs for a massive trade. This trade right here netted me 10 racks. You don't need more than that, bro. You don't need more than that on one trade. Did I just mark it in? Yes, we mark it in, bro. It's an inverted fair value gap. We mark it into the trade. We already have the framework done. This market comes down in, puts a low in, puts a lower low in, into a higher time frame PD array, which is a 15-minute gap to the left. You're going to see it right here. First presented 15-minute gap of this leg up, a very powerful signature of price, right? Now jump onto the 1 hour. I'm going to blow your minds. Overlapping with a 1 hour first presented fair value gap on the leg. So now you got a 1 hour, a 15-minute, and a 5-minute gap all sitting there perfectly. Very strong area for price, right? We tap it, okay? And then we reverse. I'm waiting for an inverse of this bearish gap. We get it, targeting all this other external liquidity to the upside. And then 1, 2, 3, 4, 5, 6 TPs. Very, very, very good trade. So this is an example of an inverted fair value gap model delivering out of a higher time frame PD array with a manipulation leg, which is this leg right here. Here's your low, right? Here's the low, high, lower low, inverse, rock and roll. This is the S&P 500. This trade was executed on the S&P 500. Very, 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 very solid trade. One of my favorite trades of the month, actually. I think this is one of my favorite trades of the month of May so far. How long did it take you to get over financial stumps in trading? It took me 4.5 years, man. 4.5 years, bro. Blowing money for 4.5 years. I started trading in 2016. I started trading Forex in 2016. Tons of problems. Guys, can we get some more likes on the stream, man? We got 20K likes. Let's see if we get up to 30K likes on the live stream, man. I appreciate you guys. If you guys want more free content, help me out with the likes. Help me out with the new follows. If you're enjoying this stuff, if you're gaining value from this stuff, please, please, please like the stream, follow the stream. That's all I ask, please. I'm not going to talk about SMT during this live stream. That was I don't want to talk about SMTs right now. SMTs to me is very, very annoying to talk about. I have a question to ask about position sizing. What's your question, brother? Can you review the 950 macro back on a May 15th unicorn after SMT inside a 5-minute? 950 macro on May 15th. 950 macro on May 15th. All right. On ES or NQ? ES or NQ? Who asked this question? 950 macro back on May 15th. 950 macro, May 15th. Okay. 950 macro on May 15th. This is on ES. It's on NQ. Of course. 950 macro. What was your trade idea, brother? What was your trade setup here? This looks like horrible chop. So I don't even know what you're trading here. Unicorn after SMT inside the 5-minute for unicorn after SMT inside the 5-minute for value gap. You're gonna have to point this one out for me, bro, because all I see is chop. 950 macro. 950 macro. I'm assuming you're I don't see a unicorn in here, dude. Unicorn after SMT inside the 5-minute fair value gap. What are you looking at here? You're looking at this gap right here. I'm assuming you're looking at that gap. Correct? 5-minute unicorn. 952 to 953 is when I got in. I'm gonna be honest with you, dude. There's no clean unicorn here. There's no clean unicorn. I don't like the structure of this at all. You're in a very choppy environment. I don't know if you're calling this a unicorn. It's not. There's nothing here to trade. A 1 minute unicorn. Nah, there's nothing here, man. Your eyes was playing tricks on you here. I guess are you talking about this? All right, so listen, bro. I'm gonna be honest with you. There's really nothing. There's nothing here. There's whatever you traded here. Take this and screenshot it. You want to stay away from this. This is low probability sideways chop, and a high resistance liquidity area. There's nothing here. Your eyes are playing tricks. This is not a bullish breaker. You're not sweeping any relevant liquidity. There's nothing here. I don't know what you marked out as a breaker. I don't know what you marked out as a bullish unicorn. There's nothing here. What unicorn did you mark out? Give me the time frame so I can figure out what you did here. Give me the exact time of where the unicorn starts. Because from my eyes, there's nothing here. He said it was on 1 minute, but there's like a million 1 minute little like breakers that I can draw out here. How do you know it's going to be low probability today? Look at this market. No breakout, right? No opening range breakout. Okay, so anyway, he's not answering me, but this is not a good trading setup. If you look at the 5 minute, guys, there's nothing here. I would not be trading this type of price action no matter what. You might get a breakout here. This to me is very difficult for me to trade. Yeah, there's nothing in there really. It's just that's the consolidation zone. Choppy as heck, bro. All right, we got some people that want to come on as guests. Should we bring you guys on or what? $947 breaker, 956 entry. 947. I gotta find this out, bro. I want to know what you. I want to know what you took here. 947 breaker. Are you talking about this? That's not a breaker. Yeah, that's not a breaker. It's not a clean breaker at all. That is maybe the 30-second gave a better. It's really ugly, bro. It's very ugly. It's something that I wouldn't even be looking at. See, the reason why I don't like this is this. Okay, here's a learning lesson on breakers. You want to see a low get put in, a high, a lower low, a defined lower low, defined low, defined high, defined lower low, defined higher high, right? This is not giving you any of that. This is giving you just, there's no defined smooth edges in here. It's very, very ugly. I wouldn't mark this a breaker. Honestly, it would be a low probability breaker for me. It's very, very, very dicey. I mean, it doesn't even work. It fails. Look. This is not a breaker. See how it comes back and retests and then fails? It's not even a good breaker. Very low probability. I would stay away from that. Yeah, you're definitely too zoomed in. If you go on the 5 minute here, bro, you're gonna realize like you got lucky in this trade. This was just you were just trading consolidation. No problem, bro. 2 doji micro balance. I don't know what you're saying, bro. I don't know what you're saying. Guy keeps saying the same thing over and over again. I don't trade gold. PJ, I'm in the audience if you want me to ask you my position sizing question. Oh yeah, sure, brother. Let's bring you on. I don't see you in the guest thing. You're gonna have to go in here. You got a request on TikTok. On the May 8th steamer. Ooh, I like this guy already. He knows about my steamer. There was also a mitigation block with a fair value gap that could have got you in sooner. This will be fun. Mitigation blocks. Could have got me in sooner. Explain? There was also a mitigation block with fair value gap that could have got you in sooner. Okay. Where is it? On the 1 minute before the inverted. On the 1 minute before the inverted. With a fair value gap. I don't see it. The issue with whatever you're saying is this bearish fair value gap is the issue for me. I don't want to get into anything down here because this bearish gap could just hold price down and flip. The confirmation is the inverse of this large bearish. If I'm in sooner here, it's risky. You know what I'm saying? Like this is the first presented fair value gap on the manipulation leg down. My model doesn't get me in down here. I need to wait for a flip because many of times you're gonna get in down here and you're gonna get flipped to the downside. You're gonna get torched. It could easily respect the SIBI, so it's super risky. But I'm trying to find your 1 minute gap here. There's no gap. Where's the gap? Where's your 1 minute flip? This tiny ass flip? Nah, there's no way. I'm trying to see your 1 minute. You said there was a 1 minute flip here. I don't even see it. Oh, I thought you said 1 minute mitigation with a fair value gap. Isn't that what you said? I don't even trade mitigations, bro. I don't even trade them. They're kind of low probability and dicey for me. I tried trading them for a while. I'd rather just wait for any inverse. How do I request to be brought on? I don't know. There's like a little button somewhere on TikTok. You can do it. No, I see it would have entered for a put. You can see it coming through the support. No, I see it would have entered for a put. You can see it coming through the support. I don't know what that means. So yeah, we waited for this to inverse, guys. This is why you got to wait for that first presented fair value gap to get flipped, and then we're in on the trade here. We're entering right here for long right here. That's where we got long to the upside. So which POI do you use? Point of interest? Is that what you're asking me? If an inverted fair gap if a fair gap is inverse, what time frame candle needs to inverse? Same time frame on 1 minute. Okay, depends what time frame you're trading. Yeah, this right here is the last line of defense, right? So this is why we had to wait for this to flip. If I'm getting in down here, the SIBI can just hold us for lower, so it's kind of dicey. Would you consider this your A plus? This was A plus. Yeah, this had every element I wanted. We were tapping into the first presented 15-minute 1 hour fair value gap on this leg up over here. So you could see right here, that this market comes back down into the first presented gap, fills it, last line of defense, right? I talk about it all the time, flips, and then we get a 1 minute inverse to the upside with clean liquidity. So yeah, this is A+. This is one of those trades where you get excited. Show a loss trade. Okay, let's look at a loss trade here. Look at Thursday's trades. Oops. I got to bring price back real quick. Let's see what we got here. Let's see what we got here. Wednesday, Thursday. Let's go to Thursday real quick. I think I took this trade on NQ. Ooh, I remember this trade. Yeah, I remember this trade specifically. We were looking for data wick lows. We never got it. Thursday. Where are you, Thursday? Okay. Yes. Okay, here we go. I remember this day specifically. This is the day that I tried shorting into the data wick low twice. Yes, right here. Okay. So I'm going to give you guys some framework on this trade setup and why it didn't work out. Okay, so we've got London lows down here. We've got like this London sweep down here. I'm going to mark it out as a London low. Market's trending lower too. Let's just get like the time frames down here, like the 5 minute. 5 minutes trending lower, right? We're retracing and I'm looking for lower. 50 minutes, same situation, dropping lower, retracing, looking for lower. So my bias on this day is short. And what I really wanted to draw into is this data wick low here. This is an 8:30 data release low. And what I love about trading data wick lows and highs is you usually can use it as a draw. You can. I always use them as a draw. So we're looking at this as data wick low. Okay. So data wick low is my draw in this scenario. Now we go up into this area and we sweep liquidity. What was this? Was this a liquidity pool I was looking at? No, it was just sweeping it. Okay. But I think it was delivering out of a 1 hour gap. Yes. Okay. I remember this now. Watch why this was very tricky. 1 hour fair value gap. Okay. Look at this. Look at the structure here. First of all, chat. Looks pretty bearish, right? Looks pretty bearish. I'm going to draw out some things of what I saw. There's a 1 hour bearish breaker right here. Okay, that's the first thing I'm looking at is this 1 hour bearish breaker. Then I'm looking at this 1 hour bearish FEG. Price is pulling back into there. It's actually a unicorn 1 hour breaker to the downside. That's what it is, right? You get a high, low, higher high, new lower low. It's a 1 hour breaker. I'm looking for continuations just down to the data wick low. I don't even want more than that. I just want continuation. So we're in the 1 hour bearish FEG. We're in the 1 hour fair value gap of the bearish breaker, which is the unicorn gap on the higher time frame. I'm like, ooh, this looks pretty good, okay? So I'm on the 15 minute. It doesn't look the greatest on the 15 minute by any means. It looks very choppy here. It looks like we're in like a wedge. Usually this looks like to me, like a bearish wedge, okay? On the 5 minute, really doesn't look good at all. But the higher time frame 1 hour looks good. And then we drop down onto the 1. Now, I'm looking. See how this market is now, it put in, watch this. I'm going to delete this because there's a double breaker here. It's very confusing this day. This day was very tricky for me. So we're inside of the higher time frame 1 hour gap, which is these blue lines. We're sitting in there, okay? So I'm looking for this market to go lower, right? We get a 1 minute breaker right here. Look at this 1 minute breaker, chat. I get a 1 minute breaker, so we get a low, high, lower, low, new lower, low, high, higher, high, lower, low. Here's the breaker setup. Here's the massive bearish FEG. This is where I take a short. Take a short, right? So we take a short. I believe I took a short. It had to be right here somewhere. It was right here somewhere. I think it was right here. And I was targeting data wick low. This is my idea, right? 1 hour time frame looking very bearish. We have a 1 hour breaker to the downside. I'm gonna show you guys. I'm gonna tell you guys why it didn't work though. In hindsight, looking at it now, we were just going internal to external. Look, internal to external again. So this was just me counter trend trading into a data wick low. And the mistake was the counter trend trading. I just need to lean on longs, right? We're just going internal to external. So we end up getting in this trade. Stops above the breaker like this, and we get stopped out like just immediately. Stopped immediately. We were in the trade like right here though, because I remember the trade moving in our favor, and I'm like, oh, this looks pretty good. Yeah, it was right over here. We got stopped twice on this though. Yeah, I remember that. And then the market just ends up holding this BPR here and going higher from there. Okay. And then, yeah, that was it. That was the trade. I was just targeting these data wick lows. We never got the data wick lows at all. This is just choppy, and the trade ends up not working out. We just don't get the displacement out of the 1 hour gap. The 1 hour gap just keeps getting held and held and held longer and longer. And the longer this happens, the lower probability my short idea ends up becoming, and it just ends up not getting there. Yeah, it was just super choppy. A lot of people I know, like some big traders, they all were looking at the same idea. We were looking at a 1 minute bearish gap here, looking for those data wick lows, and we just didn't get them. We just did not get the follow through to the data wick lows, and never even went down there. And a lot of times, I'm telling you, more often than not, maybe 7 out of 10 times that data wick lows is a clean draw. Because look, we put data wick high in and we take it. We take data wick high, and now we leave data wick low. It's very unusual that you don't see data wick low get at least tagged. So watch what ends up happening. I don't even know if this takes data wick low. Let me see. I forget because this market was so choppy after this. I was just like, I'm totally done with it. Yeah, it never even gets down to data wick low. Just never goes there. Ends up just going higher. So yeah, that trade just doesn't work out. But on the higher time frame, on the 1 hour, it looked good. But because look, we were looking at this market here. So I'm looking at this market. I'm looking at that market. Structurally, this looks bearish to me, right? I believe we're even tapping at, yeah, look, this is what I saw. Look at the higher time frames I'm looking at here. This 4 hour FEG, this massive bearish 4 hour FEG gets rejected beautifully, right? We come up, we reject, we put in a 1 hour bearish breaker. I'm looking for shorts. This looks pretty good for a short. To at least take data wick low. I'm not looking even for more than that. I'm really not. And that was it. It just didn't work out. Did not work out. I'm in guest on TikTok. All right, let me bring you in, bro. We'll do a couple questions here. Oh, you're not here anymore. You might have to request it again. I'll put my headset on. All right, let's bring in Alex. Hello.
Hey PJ, can you hear me?
Yes, sir.
Hey man, thanks for having me on.
No problem, buddy.
Basically my issue right now with trading
Mhm.
is when I go to get into a position, let's say there's like a bigger gap, like a 5 minute or a 15 minute, whether it be like a BPR or whatever, an inversion, just taking a position. Let's say I don't know because I'm still kind of getting used to trading. It'd be basically 25 times whatever the S&P goes up. So is like the leverage I'm putting in at the moment. That's my risk. I'm risking 250. So by 25 times, I mean like if
You're on the S&P 500, you said?
yeah, if the S&P goes up 5, I would be up $125, right?
Okay, so you're trading a full mini is what you're telling me, right?
If that's what that is, yeah. But
So
basically,
hold on before you continue. There's how new are you to trading?
I mean, I've been in the trading scene for a while, but like I'm learning futures.
Okay.
I've been learning futures for like 6 months now.
Where are you coming from? Forex?
Nah, just maybe like I guess penny
Crypto,
stocks.
penny stocks. Okay. So
Yeah.
just so you know, there's two different contracts in futures. There's MNQ, which is a micro contract, and then there's NQ, which is a mini contract. It's the same thing on ES. So if you're
Yeah.
trading, if you're trading ES, you're trading a full size contract. If you're
Yeah,
trading
yeah, yeah.
micro ES, you're trading smaller
Yeah.
contracts.
I think it's half of a full size contract, but I don't want to be I don't want to say that like definitively. I'm using a trading firm at the moment. It seems to be
What are you
um
using?
it seems to be like fine. I looked into them, but it's they're called Lux Trading Firm, but like nobody's ever fucking heard of them.
I've never heard of them, bro. I would probably run from them as soon as possible.
Yeah, I looked into reviews. Reviews said fine. I mean, like if they fuck me over on an eval, it is what it is. I have like a discount with them to go again. It's more so about like becoming profitable. But anyways, so let's say it's half of a full contract.
Okay,
Um,
so five micros.
yeah. So if I go up from like that would I could do that comfortably on like a 5 minute or 15 minute inversion or whatever. But if I go to try to do like a breaker on a 1 minute, because I can leverage more because I have a smaller area of risk,
Hmm.
you know what I mean? I'm upping to keep my total risk at like 250 a trade, right? I
Okay.
would be like I'm getting stopped out when I'm doing stuff on a 1 minute time frame. Do you
Okay.
see what I'm saying?
Yeah, I'm not sure what your question is though.
Basically, like how are you like if you put in a trade, right? You have a set amount of risk. What are you currently risking typically?
It really depends on the trade setup.
Okay.
It really
Okay.
it depends how big the inversion is. It depends how big the breaker is. It all really actually depends on like the trade setup specifically. So it's not like a one. It's
Right.
not really like a one number fits all type thing. It's really dependable.
Yeah.
Like for this example right here, I'm looking at this inverse on
Okay.
ES here. This trade setup would be risking about eight points. So
Okay.
if we look at this for like a mini, and I have to do this really quick because I don't think TikTok likes me doing this. Um, yeah, so this trade would be risking like 450 points on one mini on the SP 500.
Okay. But you're not risking like 450 on every trade.
No, it depends. Yeah, it depends on what the trade setup is. What's great? Like, is it an A plus setup? Is it A
Yeah.
minus? Is it B? Like, is the high probability trading condition day? Is it sideways chop? Am I switching to eval that day? Like, it all depends. I don't really have a set number of what my risk is. I recommend people be around like 250 to 300 max per trade.
Yeah. Yeah, because it gets tricky because like you know like you'll have a lot of these teachers like yourself being like yeah risk 250 300, but you yourself are switching it up, so it's like there is a skill that has to be acquired that's maybe just hard to teach in terms of
100%. I mean, I've been trading 9 years versus someone that's been trading 6 months. So I recommend the person that's just starting trading sticks with a set amount of contracts and sticks to it until they're able to scale. So like for
okay.
yourself, I would literally just stick to one sizing, until you have a certain amount of buffer in your account. And what I mean
Okay.
by buffer, I mean by profit. Then you could risk more. But in the beginning, my rule of thumb is for every $500 worth of drawdown in your account,
Hmm.
you're going to use one micro, right? So
Okay.
if you have $500 worth of drawdown left, use one micro. If you have $1,000, you use two micro. If you 50, you know what I mean, all the way up, and then
Yeah.
eventually you get to a point where you're going to be using a full size contract.
Yeah.
So
So
in the beginning, you just want to be sized down because you got your entries are never going to be perfect in the beginning. That's one of the most difficult things with trading is the entries because you might be messing up, you might be using too wide of a stop. So I recommend just sizing down on micros for sure. You should be using probably like anywhere from 3 to 5 max.
Yeah, so basically, I think what you're telling me is that like if I'm having no issues with going off of a 5 minute or a 15-minute inversion and
Hmm.
placing my stops and not getting stopped out and I'm using half a contract,
Yeah.
that if I'm trading a 1 minute inversion maybe inside the 15 minute to trade to not increase um to just keep it that I'm at half a contract basically.
Yeah, I would just keep it to keep it simple in the beginning, bro, because you don't want to overcomplicate it. Like you're not even really scaling into positions or anything right now. I would just keep it, keep it simple. Stay with
Oh,
one side's contract, and go from there.
okay. Hey man, I just want to say I really appreciate you doing all these trade reviews. Is awesome. I was hoping to get on last week. I wanted to ask you some trade reviews questions, but I even went on my old ones, and just because of how long time's passed, it's like impossible to like go over them now.
Yeah.
So I want to say it's awesome that you're fucking doing this. And thanks for having me on, man.
Hey man, I appreciate it. Thank you so much, bro. I hope you I mean I hope you're obviously start improving in your trading but I really think that the thing that you should focus on right now is your risk. And if you're on a funded account right now, I would definitely use that rule of thumb is for every $500 of drawdown, you're going to be using one micro
Okay.
and
Yeah,
just
yeah.
scale it up.
I mean, PJ, you've taught me so much. I mean, I knew a lot about trading beforehand, but futures, this side of trading is completely fucking different with the way the market moves. So it's been huge coming over here and learning ICT from you.
Appreciate it, man. Thank you for coming on, brother.
Thanks. Bye.
See ya. Forget 500 risk per micro. I do 100. Tell me you're unprofitable without telling me you're unprofitable. Brother, do you have a course? I don't. I basically do have a course. Well, I do. I have a starter course inside the premium, which is that course gets you guys all set up with my charts, my style, the model that we're trading, all that stuff. It's literally a quick course, like an hour and 30 minutes. But then every week I upload premium education in the Discord, and there's new content literally every single week. So we're always educating in this Discord. I mean, it's probably the best $100 you'll ever spend if you're actually a serious futures trader. Um, if not, then you're still learning. Then stick with the free content. But the premium stuff is you can't beat it. I was actually shocked at what some other people are charging versus what we charge. Like it's not anywhere near like what some of these other people charge, and we trade the same style. So um, yeah, we do live trading depending on the economic calendar, like usually 3 to 5 days a week. Trade reviews for free, uh, live commentary, analysis, course, premium education. That's all in the premium Discord though. It's only $100, and yeah, that's probably the best value you guys are gonna get. But yeah, man, there's my idea, the way I teach, the way I want. I don't want people to just be signal botting my trading. We're trying to create like actual independent thinkers here in the Discord and in the TikTok and the YouTube. So people that come into my Discord within like a month, they end up getting funded. So I mean, you can look at the testimonials we have. We've got like literally 103 reviews on WAP. It's people are really enjoying the content. Are engulfing candles a real confluence? They're definitely a very very strong signature of price for sure. The higher the time frame engulfing, especially out of a reversal area, very strong confluence if the market's going to be reversing or not. But make sure you're using them on the higher time frames because the lower time frame signals are going to be very confusing for you. Just buy puts now, bro. How many times are you going to ask this question, dude? Nobody here is trading puts. This is we're talking about futures trading. You know anything about using the ATR managing risk, average true range? I don't know what that has to do with your managing of risk, though. Let me bring some people on. I want to talk to some of you guys. bring on this guy real quick. Sebastian.
Yo, what's going on, man?
What's
I hope
up?
all is well. I had no real unique question. I was just curious, do you personally trade MOC, so the last 10 minutes of the market close?
No, I don't. My kill zone is about 9. It's 9:30 to about 11:30, 12. So I'm never waiting for market close. Really, you're talking about like power hour, like the last 10 minutes.
Yeah, last 10 minutes, because I know typically around that time, there's a lot of either buying or selling pressure, depending on what the data comes out with.
There was this Friday, right? There was a big move.
Yeah, I was calling for a bullish market, or bearish market, my bad, a lot of sells, and then we saw the dump literally right after close, too.
Yeah, no, I don't hang around that long, for sure. I'm usually in and out in the morning session. That's my session. I stick to it, but yeah, no, I don't wait around for that long into the market. You're talking about like 4:40, like the end of the market. Uh-oh.
10 minutes, I get some data whether the bulls are majorly buying in or the bears are majorly buying in, and then typically what that data shows me is where if I decide if I'm going to be going short or long.
Oh, nice. How long have you been trading that?
I would say I don't try to do it every day because it's sometimes the data doesn't really align with the way I'm feeling for the day.
Mhm.
But I usually would do anywhere from 2 to 3 trades per trading week for MOC, and I would say if I had to put a percentage on it, from like a 70 to 80% winning rate on MOC at least.
Nice, man. Nice. Yeah, I mean, Friday, the reason why we had such a big sell-off too, there was like that whole credit agency thing with Moody's, and then that also, I mean, we had OPEX expiration on options, so usually on a Friday like that, you do get some like crazy move. I think that's a big part of it, why the reason we saw that.
Gotcha. Okay. Well, thank you so much for being able to answer my question.
All right, buddy. Have a great day.
You too, man. Thank you, PJ.
Yo, what's good, man?
Yo, what's up, buddy?
How are you, bro?
Good, good. How are you?
I'm good, man. I just got a couple questions for you,
Sure.
if you don't mind asking. So right now, I've been trading CFDs. So I've been trading NQ through CFDs
Yeah,
for like 2 years now.
yeah,
I really want to make the move to futures because right now I'm very break even. Like I'll buy an account
yeah.
and I'll hold it for like a couple months. Like I'm very break even.
Oh, you're like swing trading.
No. Like I'm intraday trading, but my risk, like it ties in with psychology. My most recent account, I was in 2% risk, so I've just been risking with 0.5%. So this is a CFD account, so there's an 8% profit target. It's not like futures.
Were you playing FTMO?
No, it's like it's a new prop firm. They have really cheap accounts.
Oh,
I'm not really expecting anything from them. I'm
okay,
break even, so
okay.
I'm just trying to test out all that stuff. So I just really want to understand how futures accounts work, how the sizing is, because
Yeah,
on CFD it's quite different.
yeah. It's pretty simple. So on ES is going to be a full size contract. So there's the
Yeah,
S&P 500 and the Nasdaq. Those are the two that I trade, so I'm just going to talk about that. But ES is going to be equal to $50 per point.
sure.
Okay, I'm pointing.
Yeah,
I'm typing it on the screen too.
yeah.
And then MES is going to be a micro contract. It's going to be equal to $5 per point.
Mm-hmm.
And then NQ is going to be equal to $20 per point. And then a micro MNQ
Yeah,
is going to be equal to $2 per point. So that's how these contract sizes work.
sure.
People that are just starting, I recommend that they obviously start with micro contracts just to get used to the market. Going
Yeah,
down a full size contract is going to be pretty detrimental and pretty wild. So that's how contract sizing works on both of the two indices that I trade. I know it's a lot different than what you're used to in CFDs because I believe it is lot sizing, correct?
yeah. Lot sizes and the profit targets are way higher. So sometimes you could risk like 2% of that account on one trade.
You could do the same thing on futures too.
Yeah.
You could do the same thing.
But isn't the profit targets lower and daily drawdown and all that stuff.
Yeah, I mean, if you have like, yeah, there's all different types of. I can't really talk about that on the live because I don't think
Yeah,
TikTok
yeah,
likes it, but I have so much information on my Discord about that. But
sure.
there's so many, like, if you go to my Discord, you go to prop firms and go look at all the ones that I recommend. There's all different rules and stuff, but yeah, I mean, the benefits of futures trading over CFDs is obviously the spreads, or there's no spreads. So
No spreads, copy trading, all that stuff. Yeah,
yeah,
great.
CFDs you have spreads. Futures you have no spreads. CFDs you have I don't know what the fees are on CFDs these days, but futures fees are very low.
Hmm.
And obviously then like you're in a regulated market with the CM, like it's regulated by the CME group too. So
Yeah,
you know, these CFDs, I mean, besides FTMO and like the bigger companies, a lot of these you know, FX brokers are very dicey. So there's just a lot of benefits. Listen, I traded CFDs for a very long time. I traded forex for a very long time, for like 4 years actually. So a lot of
yeah. I
people
think
end up
yeah,
migrating over.
yeah, definitely. Especially when you're trading NQ, I would say if you really want to grow your account, because CFDs they don't allow you to copy trade.
Yeah, yeah,
So, yeah,
that's
it's,
another thing. You can't even get the benefits of copy trading, which is like obviously the big draw to futures in the first place.
yeah, and yeah. So thank you for answering that. I have one more question for you if you don't mind.
Yeah, man, go ahead.
So right now my model consists of a retracement, right? So it's a sweep or like just a key level, so a PD array,
Yeah.
and a displacement and a retracement. Most of the time, for example, like an inverse retrace or just a regular fair value gap retrace, where I usually wait for it to go into 50% of it.
Hmm.
Um, and I've noticed I'm missing a lot of trades because sometimes it doesn't really get into 50%. How do you like get around that and know when you shouldn't be entering off 50%? I know 50% is like the best time to enter,
Yeah, it's
but
gonna be the best RR. Yeah.
yeah, but these couple months I've noticed, they're not retracing into 50%.
So there is literally, so here's the thing. There's two ways to trade all these models, and like
Yeah.
you're what is your model specifically? Is it in inverted fair value gaps, or what do you
So yeah, so recently, I have to adapt to the market. So I have two models now, like just an inverse retrace model with a
Mhm.
sweep or of a P array, and the regular liquidity sweep breaker structure retrace fair value gap with a like paired with like a 5 minute inverse
Right,
just
right,
for
right.
extra confidence.
Can you see this? Do you see the screen right here?
Yeah, I can see it. Yeah,
This is literally what you're talking about. So you're looking at a 5 minute inverse off of a liquidity sweep out of a higher time frame PD array, which is up into here, which is this gap to the left. I don't know if you can even see it
yeah,
on TikTok. But this is your model right here, right? And this is what you're looking for is this retest right here, that 5 minute
yeah.
gap,
That
and then you're short.
because yeah, I'm more comfortable with a retrace. I don't really like the candle close then enter. I'm really comfortable with retrace entries.
So that's honestly just going to be a part of your model. Like you're a
Yeah.
lot of times you're not going to get a retest.
Hmm.
And that's just honestly going to be part of your model. You're actually going to have to be really patient with that.
Sure.
If that fits your model and that's the way you want to trade, then trade it. I always tell people that this is literally like a situational type thing. Um, like let me bring this price back right here. You can see this right here. You see how this candle closes below? That 5 minute candle closes below.
Yeah.
There's some traders that literally that this is it. They're in the trade.
This is enough for them. Yeah.
It's enough for them. Like they're in this trade right here. And it honestly, it's fine. There's no wrong way of doing this. That's actually the right way too. You could take it on the break on the candle closure, or you could take it on the retest.
Sure.
So it just comes down to, do you want to stick to just taking retest trades, or do you want to actually get in on every single inverse, and then just set your risk appropriately? That comes down to the
Yeah.
trader, right? There's no like one size fits all type thing for that.
So would you say with more aggressive entries, just based on market conditions? So you see how in this trade it went into 50%. Sometimes it will retrace, but not into 50%. Would you say like that's what I'm struggling with?
You're
So
struggling with what exactly? Like the
so
risk of it, or like the RR? Like what?
no, just essentially because I'm very strict to the point where it's kind of limiting me. So I really want it to get 50 CE of the 50% of the fair value gap, right?
Yeah.
Sometimes it will enter, lower than that, and I won't enter. like it'll wick inside like slightly, and then it'll dump. That's why I'm really trying to get around.
Somebody said in the chat, shouldn't you backtest and see which one is more profitable? So it's not about which one's more profitable. It's about which one has the better RR, basically. So like the retest will always have the better RR. And the other way of trading it is, I think, going to be very similar as far as probability goes. It's not that it's wrong. It's just that you're gonna be running a wider stop. It really depends on how you want to trade, man. Like I said, there's no one size fits all for this. I understand what you're saying, but if you want to take a retest trade, then you have to stick to that and just wait for retest then. But you're not the first person that's told me, hey, like I'm not getting retests, I'm missing trades. And that's why I do recommend maybe just sizing down your position and taking the break instead, because you're going to get in the trade.
So would you say I should really focus less on really trying to get an entry off the 50% and just enter when there's a retest?
I'm not telling you anything. I can't do I'm not telling you how to trade. I'm just telling you that if you like that model, and we know that the model works both ways, then maybe make a hybrid version of how you want to trade it. Sure. You know, like maybe if you see the liquidity, maybe if you see a nice V-shaped recovery out of an area and it looks very, very good, and you don't think you're going to get the retest, like a lot of this is reading it, man. Like it's a skill set, just reading the price. Sometimes I'm in the trade on the inverse. Sometimes I'm waiting for the retouch. It depends on, is the market moving that day? You know, is Trump tweeting that day? Is the volume low? Am I in a high probability zone? Or like, there's so many factors that you have to build into as to what, you know, how am I going to take this trade? So in my opinion, it's situational, man. It's always going to be situational. So I would probably like build in like a hybrid version of it. It's just like kind of what I do.
I'm definitely gonna try to get a bit more, you know, market experience with this retrace stuff. But yeah, thank you, I appreciate it. I would like to say you taught me the V-shaped recovery stuff.
Nice, man.
It's really, I've implemented it, and it's worked beautifully. I could actually tell when there's high probability reversals.
Yeah, I mean, like if you're looking at this trade setup right here, you can see that it has like the V shape out of this area to the left, which I don't know if chat, you guys can see this. This is the bearish gap to the left. So the market taps into the top of this 5-minute bearish, V shape recovery out of it, 5-minute inverse. And then, what was your name?
Just my name's Raheem.
Raheem. And then on this trade setup, like it does get that beautiful retest of that 50% consequent encroachment and then goes. So there's going to be times where that works, and there's going to be times where the other one works. It's a situational type model, but good question, man. I hope you end up figuring out how you want to trade it.
Thank you. I appreciate it. Take care, man.
All right, buddy. See ya.
See ya.
Good question, chat. I always talk about this. It literally comes down to the trader. How do you want to trade it? Like I said, sometimes I'm trading it on the break. Sometimes I'm waiting for the retest, and I might miss it. So it's a situational thing. It's really up to you guys on how you want to trade the inverses. Are you saying QQQ dumps, bro? Are you done with dumb comments or what? Like it's got to be getting boring by now. How many times are you gonna ask the same question about taking puts? We're looking at data from March 5th, bro. Come on. This guy asked the same question 25 times. All right, let's get somebody else in here. Hello.
Hey. Can you hear me?
Yeah, I hear you loud and clear, brother. What's going on?
So I'm having a question about draw liquidity.
Yes.
So I've looked into the IRL to ERL and the daily profile, but sometimes in the New York session, I'll often get my bias wrong and often ending up trading the manipulation. So what's your tips on recognizing it is the manipulation and not the real move?
Can you just say that again? You're trading what? You're trading internal to external, right?
Yes.
You're trading internal to external, and you're looking for what?
And I've looked at the daily profile as well.
Okay.
But sometimes I got manipulated and I trade a manipulation leg instead of the distribution leg.
Do you want to give me an example so I can look it up, like an actual trade that you might have taken that you got manipulated on, and I can see why it was like wrong, because that's better to answer that. I can't really.
It was from a while ago. I haven't taken a trade.
So you're
Just long.
what you're saying is the market's going. You're in an internal zone. All right, let me get this straight. You're in an internal zone, right? Correct. And then you're getting manipulated in that zone. Is that what you're saying?
Yes. Sometimes like price wants to deeper into the internal range, but sometimes I just enter a trade too early.
I
That's
got
what
you.
I'm saying.
No, I got you. I get what you're saying. Hold on. I'll show you right here. Okay, so for example, this trade I took last week or 2 weeks ago Thursday. I just talked about it earlier. Here's, I guess, what you're getting stopped out with. So, okay, let's say that you saw this price action here. Are you looking at taking this trade you're taking like this trade out of the internal zone here? Like this is that 1 hour gap here. So you're taking a trade here.
Yes.
And then you might, like, you're in profit, right? And then like this market's coming lower and then going.
Yes.
So what I recommend you do is you're always going to be, so look, this does work here. Like this actually ends up working, and you could actually trade like a straight up 1 minute inverse to the upside here, which it does end up giving. And this model right here would have made you like 20 points on ES, which is really solid. But a lot of times what you're going to notice is the market wants to, so like people are putting orders in here. And to me, this is one thing that you really need to understand. When the market comes in like this and it just like dips in and then flips, it's not a true like dig in, I call it. I like to see the market dig into the gap and then go. So watch how this market then manipulates this low one more time. Now, the other thing that you have to understand is, let me see, I think there was a low down here that I was looking at. No, that was a different day. So what's really important to me is the first percent of fair value gap on the leg. So if you look at the 50-minute time frame here, you see how we break out of this? See how this is a breakout gap here to the upside?
Yep.
Okay, this is a breakout gap to the upside. This is the first presented gap of the breakout. This is going to be the strongest line of defense. So I want to see a manipulation in the zone. I want to see a low get put in, a lower low, and then a higher high. And that's what you have to be waiting for. You want to be waiting for that manipulation leg to happen first, because most of the time you're going to notice it's going to happen. You're going to see a manipulation. Once you get a manipulation, that's when you can really look for a reversal play or your model. Okay?
Yes.
So a lot of the times what you want to wait for, just like actually, we just had that other example up here. This example actually is really good too, because you're going to see a lot of people are like, well, why didn't we take the first manipulation leg? Well, hold on. Let me show you here, because the market loves to do this, right? This is the manipulation. This is going to be probably another area you'd be getting stopped out on, right? So if you look at the 5-minute, watch what happens here, right? You have to understand what manipulation looks like. We have a 5-minute bearish fair value gap to the left that the market manipulates into one time over the Asia high here. So Asia high gets swept, and you're like, well, why aren't we shorting this just yet? Well, number one is there's really no model here, because if I delete all this price action for a second, there's not even an inverse here. Like this ends up holding. If this flips to the downside, maybe I'm interested in shorting it, but it holds here. Then once we hold this gap, which is the first presented on this leg, we go higher to manipulate again. Now you're digging in deeper into this fair value gap. This is the manipulation leg. Anybody that's short here just got stopped, and you're digging deeper into the 5-minute fair value gap at this point. So now I'm getting interested in a V-shaped recovery, which you end up getting. Then you get the inverse, and that's when you take the trade. So a lot of the times you're going to notice you got to be patient with this, and sometimes it won't work out this way, but the market puts in a high, it comes back down, it likely wants to put in one more high to get everybody out of the market and then reverse it the opposite direction. That's something that's just going to come with a little bit more practice and skill, but always look for I call it a like a dig in of the gap, like a deeper dig in, especially when you're delivering out of a PD array like we are here. So like we dig in once and we dig in a little bit deeper into consequent encroachment, and then we go. All right, bro.
All right, thank you.
All right,
And
man.
one more question. Would you recommend backtesting by replaying mode, or just simply just looking back at past price action and doing annotations?
You could do exactly what I'm doing here. I mean, this is what backtesting looks like. We're going back to like, you know, historical price data and just going through and finding where the models are, and you could do exactly what I'm doing here.
Okay, because sometimes I use FX replay, and sometimes I just feel like I'm just scrolling through data and not really gaining anything out of the backtesting session. So I'm currently just doing annotations on the price action and not really using the replay mode.
Yeah, I mean, I use the replay mode all the time on TradingView. FX replay is good. I know TradeZella just implemented one too now. Whatever software works for you, Mo. It's more about the actual finding where the models are taking place and then going through them and actually like reviewing them. Honestly, I'm a big fan of backtesting, but it's not the end all be all. You're not gonna get better, in my opinion, by backtesting. The market is gonna be your best teacher. So forward testing is always gonna be obviously a lot better than backtesting is.
Okay, thank you.
All right, buddy.
Appreciate you a lot for.
Oh, sorry, I cut him off, man. I did not mean to do that. I did not mean to do that, bro. I did not mean to do that. Are you looking for session highs and lows to get swept before you trade? Yeah, I am, man. I'm looking some sort of session high or low. It's even better when that session high or low correlates inside of a higher time frame PD, right? If that happens, then it's juicy. It's going to be a lot higher probability, in my opinion. What? Can you explain a V-shaped recovery? It's really simple, bro. You want to look for a shape that looks like a V. So a V-shaped recovery is just a way that the market is recovering from an area. It's not lethargic, right? And then going. It's recovering in a V-shaped structure like this. For example, on the trade that we took on May 8th, if I go back to that trade, 1 second. I always forget how to cancel replay bar. So if you go back to this, we can actually use this trade. If we go back to this trade setup that we took actually, well, yeah, this is Friday's trade idea. You could see that the market comes down into London lows here, and it's a V-shaped recovery. See how it's not like lethargic, it's V. This is what a V-shape is. And we're sweeping a low. You see how we're sweeping London here? V-shaped recovery, when London low is getting swept, and then we're running higher. That's what you're looking for. Guys, if you're enjoying today's content, man, do me a favor. We're at 53,000 likes. Let's see if we can get like 100,000 likes on the stream. I do this free every single Saturday, and this is the longest stream I've ever done. We've been live for 2 hours. The amount of education I'm giving you in here, most of your favorite gurus charge $5,000 to $6,000 for it, just so you know. So yeah, we've got a free Discord. We've got a premium Discord. That Discord is not $6,000. It's only $100, and you guys get everything in there. Education, course, live trading, trade reviews, commentary, prop firm guidance, giveaways. Probably the best value you're ever going to get. But, you know, if you guys are just enjoying the free content, I completely am not trying to pressure you to do anything. That's just for people that want to take it to the next level. So enjoy the free content because that's what's here for. I'm always giving free content back to the community. It's $100 a month, bro. Why would it be lifetime? That's like the most ridiculous number. Like people are making like thousands of dollars on trades. Like $100 for life is pretty wild. Right now, I'm actually favoring ES over NQ for sure. I'm favoring it because it's just moving better. I've taken like 2 really good setups in the last 2 weeks, both on ES. Well, one setup because this one I actually got stopped break even on, but a bunch of people in the premium caught this whole move. Is $100 a month helpful for people who have zero clue what's going on? If you have zero clue what's going on, bro, I really think you need to study more. You shouldn't be joining into a pretty advanced trading group. I mean, it's good for beginners that have knowledge, but if you have no knowledge, you need to want to gain a little bit more knowledge before you get in there. The free thing is go ahead. Doesn't matter who you are. There's tons of free stuff in there. And I have a whole beginners section. So the beginner section is the stuff you want to start on first and then go from there. We've got some more people. I think I'm going to wrap this up in a couple minutes here, guys. Let's get some more people on here. I don't know who to ask. Let's get this guy in here. Do you take mix up your entries or certain entry like exchange? I take three specific models. Yeah, the beginner stuff's in the Discord. Just go to the beginner section. I recommend everybody start there if you're a complete beginner. All right, this guy's not connecting, so we're going to disconnect him. Taylor, thank you so much for the rose. Guys, thank you so much for all the roses, man. All the little tips here today. I really appreciate it. You guys don't have to do that, but thank you. Thank you, thank you, thank you. Thank you very much. Thank you very much. What are the 3 models? Guys, what are the 3 models? If you guys are have been here before, what are the 3 models we trade here on the channel? I want everyone to name them. Let's go. Name all 3 of the models. Inverted fair value gap. Breaker. Unicorns. Beautiful. There it is. Oh, it's all 3 of them. This one right here is a combination, a combo platter of a 2-minute inverse and a 1-minute breaker. Okay. In my opinion, the breaker here makes more sense, right? Because it's confirming the change in the state of delivery at the blue line. The 2-minute inversion is a little early in structure, so it might be a little dicey. But the 1 minute right here ends up confirming. It takes a long time, 33 minutes of chop and then goes. So the 1-minute breaker to me is better here than the 2-minute inverse. Just waiting for that change in the state. I don't trade turtle soups, man. Turtle soups are risky, bro. Risky. You could turtle soup this here into this long, but you can also then just get reversed and Asia low gets tagged and then you're stopped out of the trade. So, Brian, thank you so much for the hat, man. Appreciate it. All right, let's get this guy in here. We'll try some more people here. Hello. Hello, hello, hello. Can you hear me? I can't hear this guy. Oh, there he goes.
Hi. I can hear you, yes.
Yes.
How are you doing, man?
I'm doing good, bro. What's going on?
Yo, I started watching your channel now recently, yo, and I actually like your channel, bro. And
Appreciate it, buddy.
yo, it feels good to be on this live with you, man. Yes.
Thank you, man.
I just wanted to know if you can backtest the 7th of April.
The 7th of April on
yeah,
what?
But on NQ Nasdaq.
The 7th of April. What do you want me to look at on the 7th of April?
The model that entry model there wasn't looking that good.
April 7th. What time was it?
I'm from South Africa, so my timing is. But it was a buy that day. I know it was a buy. Well, I don't know.
Well, I have to know
Can you
where
just?
it was first because I only trade a certain time frame. So I don't know if you were trading like, I don't know where you were trading or what time it was.
It was on the 5 minute. Yeah, it was on the 5 minute. I was trading.
On the 5 minute.
Yeah.
Let me see if I see anything that I would have
You see
taken here.
the price. It didn't even sweep like Asia lows or anything. It just went up.
Yeah, I'm looking at this now. I was gonna say I don't see any major liquidity sweeps here for me to even. I mean, the only thing that would have been like interesting was London, but I would be sleeping at that hour. But 2:50 in the morning, you got an Asia sweep here, and then you get. Let me see here. Okay, so you get Asia. Let me mark this out as Asia low. Yeah. There actually might be a setup in here. I have to bring down price to a lower time frame. Yeah, there is a setup in here. Okay, so this is at 3 in the morning though. So I never would be trading at this hour. But if you're asking me if there was a setup on that day to go higher, there's a very nice 1 minute breaker model right here, out of the London lows. I don't know if you can see it on the stream,
Yeah,
but market comes down here, sweeps those Asia lows perfectly. Okay, so this ends up being your manipulation to the downside. This is your money sweep, and then you end up getting your low, high, lower low, higher high right here. Market comes up, retests the breaker, and then literally I don't think it ever comes back. It just rips.
That one was a bit confusing for
Look at
me
that.
day.
Yeah, that was a really clean trade during London. But yeah, that was pretty nice. Again, I'm sleeping. I'm having my beauty sleep during this time. But yeah, there's a good long setup during Asia. I mean during London there.
I'm from South Africa, so by that time I'm up already. At that time it's like 11 o'clock here by me. Like it's daytime, and that's actually the perfect time I usually put in a trade and look for a setup.
Yeah, so that was a good setup, bro. You had Asia lows getting swept. You had a manipulation to the Asia lows. You got a 1 minute breaker model, and then you got clean liquidity above. Once the market comes back down into the breaker here, you could have traded it like this. Stops are going to be below the breaker. TP1 would be at this external swing high here. It's actually a relative equal high too, so this would have been clean. TP1 here. TP2s would have been here. TP3 would have been there. There's so many TPs to draw into, actually. This is actually a really clean trade. I wish I was awake. But yeah, that was the setup. That would have been the best setup of the morning.
Oh, thank you, man. Thank you. And you should try waking up at that time. It gives really good setups at this time. Trust me.
Oh, trust me, I know, man. I traded London for 4 years straight, but I ruined my sleep schedule, so never again. Never again.
And I wanted to ask you, what is a SMT?
SMT is a smart money tool, smart money technique. It's just a reversal signature of price.
Like, can you show me an example of it?
I don't have any examples here today to show you. It's kind of annoying to find. It's like it takes too long to find an SMT example usually. But if I find one when I'm on with some of these next people, I'll show it to you because I'll remember.
Okay, thank you.
All right, man.
Much. I really love your work, brother.
Thank you, brother. Have a great day. Thank you.
Thank you.
Explain Fibonacci. I don't use Fibonacci, bro. I do not use the Fibonacci. All right, guys, I'm going to call it here, man. What a crazy session today, man. 2 hours and 9 minutes. We have multiple people ask questions. Almost 73,000 likes on the stream. 237 new followers. We had a really, really fun session today. So I'm going to call it there. If you guys want to take your trading to the next level, hop into the free Discord. That's where you start first. And if you want to ladder up into the higher tier stuff, go ahead. Join my YouTube, my TikTok. So much free stuff, guys. My long form content on YouTube. I posted one of my favorite videos ever the other day. It's on psychology. If you guys need help with your psychology, go watch that video. That video is such a good video for people struggling with psychology. So I'm going to go ahead and call it here, man. Make sure you follow the TikTok, follow the socials, and I'll see you guys next week, Saturday, man. We do this every Saturday morning. So have a blessed weekend. Be safe. I love y'all.